Hi everyone, welcome to our taxation assignment presentation. We are Group 3, also known as We Lead Tax Expert Sendirian Berhad. Today we will present a case scenario on tax computations and tax advice. I'm Ong Sin Yee, the leader of the Group 3, and joining me today we have Amsyar Nurhakim, Wai Voon, Ong Sin Yee, and Yap Si Ning. Our case scenario focuses on a married couple called Kelvin Ng Beng Lee and Michelle Lim Eun Jian. Kelvin Ng Beng Lee is a Malaysian, worked as IT manager, earning 168,000 ringgit Malaysia annually. Michelle, also a Malaysian, worked as an accountant and earned 96,000 ringgit Malaysia annually until her voluntary separation. They have two children, one is 5 years old and now studying in kindergarten, and one is 9 years old studying in primary school. Now, let's start with Kelvin's income and also employment benefits. For the year of assessment 2024, Kelvin earned a monthly salary of 14,000 ringgit Malaysia with contributions to EPF, SOCSO, and EIS. Besides that, he also received additional employment benefits, including a personal computer worth 2,000 ringgit Malaysia as a gift, a meal allowance of 500 ringgit Malaysia per month, medical and also dental benefits total of 2,000 ringgit Malaysia, and the services of a full-time household servant. He also lived in a fully furnished condominium provided by his employer with a monthly rental value of 1,800 ringgit Malaysia, including furnishing worth 400 ringgit Malaysia. Additionally, Kelvin withdrew 20,000 ringgit Malaysia from an unapproved pension scheme with 10,000 ringgit Malaysia each from his employer and also his own contributions. Kelvin also earned 10,000 ringgit Malaysia in interest income from fixed deposits. Kelvin expenditures included 5,500 ringgit Malaysia for his father's heart treatment, 1,000 ringgit Malaysia for his own medical examination, and 400 ringgit Malaysia for his daughter's dental checkup. Not only that, he also spent 500 ringgit Malaysia on a Japanese language course, 500 ringgit Malaysia on a gym membership, 4,400 ringgit Malaysia on a life insurance premium, and also 180 ringgit Malaysia per month for internet bills. Not only that, he also spent 600 ringgit Malaysia per month for childcare at an unregistered center. He also contributed 800 ringgit Malaysia to a non-approved charity, donated a personal computer worth 2,000 ringgit Malaysia to a registered charity, and deposited 500 ringgit Malaysia per month into a non-approved education savings scheme. Now, moving on to Michelle's employment income and also employment benefits. Michelle earned a monthly salary of 8,000 ringgit Malaysia with contributions to EPF, SOCSO, and EIS. She also received a 100 ringgit Malaysia monthly transport allowance from the company. Not only that, she also received medical benefits total of 2,000 ringgit Malaysia, a company mobile phone worth 3,000 ringgit Malaysia, and a 5,000 ringgit Malaysia trip to Japan. Besides that, she also received 100,000 ringgit Malaysia as compensation for loss of employment and 30,000 ringgit Malaysia for a non-compete agreement. In addition, Michelle also earned rental income of 1,600 ringgit Malaysia per month from her house in Cheras. Her expenditures included 2,300 ringgit Malaysia to install an electric vehicle charging facility, 7,200 ringgit Malaysia for her mother's diabetes treatment, 500 ringgit Malaysia for her father's medical checkup, 350 ringgit Malaysia for dental care, and 1,000 ringgit Malaysia for a full body checkup. She also spent 2,000 ringgit Malaysia on Pilates courses, 500 ringgit Malaysia on her child swimming lessons, and 3,000 ringgit Malaysia on deferred annuity premiums. This couple elect for separate assessment, and now I would like to pass the presentation to my team member to show the computation of income tax payable.
Now, I would like to start with the part of income tax payable computation for Kevin. Under Section 31A, the salary of Kevin was 168,000 ringgit taxable. Then EPF, SOCSO, and EIS were exempted. For the packaging part, a personal computer received by you for your employer for personal use were exempted up to 5,000 ringgit. So you can get a full exemption because the value of the computer is 2,000 ringgit. And the meal allowance also exempted. Under Section 31B, for the medical and dental treatment is fully exempted as the amount did not exceed 2,400 ringgit. Besides, the full-time household server were also exempted. And the furniture, the amount is 3,360 ringgit. Under 31C, the value of living accommodation is determined wherever is lower between the defined value and 30% of the amount of Section 31A. So for Kevin, the value of living accommodation is 60,800 ringgit. Under Section 31D, the withdrawal from an approved pension of employer portion was taxable at 10,000 ringgit, while the employee was exempt. Under Section 4C, the interest income received for fixed deposit in the public bank was exempted. The aggregate income was 198,160 ringgit. Since Kevin donated cash to the non-approved charity organization and donate his own personal computer to a registered charity. These two donations are not fulfilled to deduct. So the total income same with aggregate income, which is 198,160 ringgit.
Now for the relief part. Firstly, we will focus on SALF, EPF, and SOCSO. Since these three are standard tax relief to everyone, Kelvin can enjoy SALF relief up to 9,000 ringgit, while the EPF is 4,000 ringgit, and SOCSO will get maximum relief, which is 350 ringgit. Next, looking from the aspect of health-related and insurance relief, first at all, Kelvin can enjoy 5,500 ringgit for medical treatment for his father and 1,000 ringgit for his medical examination. Same goes to dental examination for his daughter. He can enjoy 400 ringgit relief. Subscription to a gym membership enable him to get a relief of 500 ringgit under healthy lifestyle. Furthermore, even though his insurance is up to 4,400 ringgit, he is only able to claim 3,000 ringgit, which is the maximum relief according to the tax policy 2024. Now, let's focus on the child-related relief. Unfortunately, Kelvin is not entitled to claim any childcare relief nor education saving, as he did not fulfill the requirements. However, he is eligible to claim child relief amounting to 4,000 ringgit in total, with 2,000 ringgit allocated for each child, namely Jasmine Ng and Anthony Ng. Both of them are below 18 years old. Last part of the relief mentioned about lifestyle relief, which included internet subscription that under his name and self-enhancement costs, which are 2,160 ringgit and 500 ringgit respectively. Based on tax policy year 2024, he can only relieve up to 2,500 ringgit. In this case, we can conclude that in the year 2024, he is entitled to get a relief of 30,250 ringgit, which means that his chargeable income for this year will be 167,910 ringgit. Now, it's time to look on tax payable. Still remember that the chargeable income is 167,910 ringgit. So for the first 100,000, he will need to pay 9,400 ringgit for the tax. The following 67,910 ringgit will be taxed at the rate of 25%, which come to with an amount of 16,977.50 cents. In conclude, Kelvin has to pay 26,377 ringgit and 50 cents in the year of 2024.
Next, I will continue to explain tax computation, income tax payable for the year assessment 2024 for Miss Michelle. Under Section 31A, her annual salary of RM72,000 ringgit is taxable, but contribution to EPF, SOCSO, and EIS are fully exempted. Her SCCA membership fee is exempted as professional subscription under Section 31A because it is necessary for the employee's professional duties and required by the employer for professional developments. Her transport allowance provided by the employer is also exempted up to RM6,000 ringgit as it is considered a work-related benefit. Under Section 31B, Ms. Michelle can claim a full exemption of RM2,000 ringgit, with the maximum exemption being RM2,400 ringgit for medical and dental treatments. For leave passage overseas, she is exempted up to RM3,000 ringgit for leave passage outside Malaysia. But her meals and accommodation overseas of RM3,000 ringgit are accessed under Section 31B and are not exempted. While her employer provided mobile phone is fully exempted because it is registered under the name of the employee under the Income Tax Exemption Order 2009 PU-A152/2009. Under Section 31E, Ms. Michelle received compensation for loss of employment for completed years of services. Since she served the company for 12 years, she can claim exemption of RM120,000 ringgit. From her compensation of 130,000 ringgit, RM120,000 ringgit is exempted, remaining RM10,000 for taxable. Under Section 4D, her gross rental income of RM90,200 ringgit is fully taxable, resulting in total aggregate income of RM104,200 ringgit Malaysia. Furthermore, Ms. Michelle also qualified for tax relief, including RM9,000 ringgit for self-relief, RM4,000 ringgit for EPF, and RM350 ringgit for SOCSO. Next, Ms. Michelle can also claim RM7,650 ringgit for paramedical expenses, with the maximum relief being RM8,000 ringgit. She can also claim RM500 ringgit for lifestyle expenses related to sports activity child swimming, with the maximum relief being RM1,000 ringgit Malaysia. Additionally, she can claim RM1,350 ringgit for medical expenses, which include RM350 ringgit for a dental examination or treatment and RM1,000 for a medical examination. Next, she can also claim RM3,000 for a deferred annuity scheme, RM2,300 ringgit for EV charging facilities, with a maximum relief RM2,500, and RM2,000 for upskilling courses registered for pilots, with the maximum relief being RM2,500 ringgit. After deducting all the relief, the total relief will be RM30,150 ringgit, and her chargeable income is RM74,050 ringgit Malaysia. Last but not least, the first RM70,000 ringgit will be taxed at RM30,700 ringgit Malaysia, while the next RM4,050 will be taxed at a rate of 19% amounting to RM769 ringgit 50 cents. Therefore, the net income tax that Ms. Michelle or she must pay is RM40,400 RM469.50 Malaysia. Now I will pass to the next presenter who will explain about the tax advice planning.
Tax planning is a critical aspect of financial management that ensures the optimal use of exemptions, deductions, and relief to minimize tax liabilities. By focusing on legitimate strategies, we can avoid penalties and achieve compliance with tax law like Malaysia Income Tax Act 1967. Now, I will discuss actionable recommendations tailored for Mr. Kevin and Mrs. Michelle to optimize their tax filing for the year assessment 2024. First, separate tax assessment are recommended. Filing jointly would push their combined incomes into a higher tax bracket, which increases overall liability. So, filing separately allows them to maximize individual relief or deductions. Next, withdrawing for an unapproved pension scheme does not qualify for relief under Income Tax Act. Therefore, Kelvin should consider investing in an approved private retirement scheme, which provides $3,000 in annual relief while securing long-term benefit for his retirement savings. Moreover, childcare expenses of $7,200 for an unregistered center are ineligible for relief. Thus, switching to a registered childcare center under the Childcare Center Act will allow to get up to ringgit annually in childcare relief. Remember to keep receipts and birth documents as proof of claim. Besides, Kelvin should open an SSPN account to claim relief for his child education. This is because deposited into an unapproved savings scheme does not qualify for relief. Furthermore, cash donations to approved charities are eligible for deduction under Section 44 of the Income Tax Act. Replacing goods donations with cash ensures compliance and maximizes his tax benefits. Additionally, Michelle should continue contributing ringgit annually to the deferred annuity plan to enjoy ongoing tax relief and long-term financial security. She also can request for non-taxable perks like professional development courses and employer-provided tools instead of taxable vacation allowance. In conclusion, separating assessment and leveraging tax relief ensure compliance while minimizing liabilities. We strongly recommend tax-related professional courses to enhance understanding and improve future filings. By adopting these strategies, Mr. Kevin and Mrs. Michelle can significantly reduce their tax burdens while aligning with Malaysian tax regulations. That's all from our presentation. Thank you for your attention and time.